AMC's preferred equity ape shares up more than 10%. Meantime, AMC down about 4%, both seeing volume more than double of Apple's yesterday. Bed Bath & Beyond and GameStop also trading lower this morning. Our next guest out with a recent note reminding investors that the roller coaster ride in these names are being skillfully operated by a few key corporate insiders. Interactive Brokers Chief Strategist Steve Sosnick joins us now. Obviously, these individuals have significant influence over the directionality of shares in certain meme stocks. Can you explain what you mean in terms of their responsibility here, as well as the specific influence they have over recent trading in some of these names?
Sure. Good morning, Leslie. What I was writing about here was, one of the things we've noted, let's say this year, is that in the case of both GME and Bed Bath & Beyond, we saw the stocks catalyzed by some insider buying. In each case, normally when you see an insider buying, they try to do it quietly. You don't see, let's say, a Warren Buffett trying to accumulate a huge position loudly and moving the stock higher. The goal of most insiders is to buy the stock without moving it. But what we saw, through some GameStop filings and more recently in some Bed Bath & Beyond filings, was sort of I'm going to say buying the stock legally but loudly. And one of the things we see in meme stocks is if somebody's buying options or stock aggressively, people take note, and that becomes a self-fulfilling prophecy. And in this case, in Bed Bath & Beyond, we had an insider buying a big slug of options against a 10% stake that he was pretty much long and wrong on. But that created enough of a frenzy that allowed the stock to get moving and get above his 15 and change purchase price.
So the recent filing that described those options purchases actually was a reflection of a renewed size of their stake as a result of some buybacks that Bed Bath & Beyond did. And in fact, Ryan Cohen hadn't been purchasing any calls or any security related to Bed Bath & Beyond since the end of March, I'm told. But still, you call Cohen's situation a, quote, masterclass in how to manage SEC filings. When buying a stock or options, notify the market as quickly as possible. When selling, utilize filing methods that offer the ability to obfuscate your intentions for a crucial session or two. But wouldn't anyone in Cohen's position do the same thing? I mean, you don't want to inform the market about an intention to sell and then drive the stock price down and then actually sell. I mean, that's not rational behavior.
Oh, of course not, nor should he be expected to do so. The difference is if you and I own a stock at about 15 and change and watch it go down to 5, our options are pretty limited. We pretty much have to, take the loss or figure out if the fundamentals justify the stock price. In this case, the hype was in place, but what we saw was a filing dated on August 16th with the intention to sell the shares. Understandably, he would want to keep that quiet. But the way that the 144s work is they get disclosed the next day. So we didn't really learn of this until almost the close of the 17th. And it's pretty clear from the filing that we saw subsequently when he announced that all the shares were sold, he began selling on the 16th. So I have to imagine that pretty much once the filing was accepted by the SEC, the selling began, and he had one day to get out, but we were in the full frenzy of meme trading. So his sales ranged from 18 and change to 29 and change. Yep. That is what I meant by the masterful use of the filings.
I see what you're saying, Steve. Unfortunately, we are out of time, but appreciate your context. Thank you so much.